All right. Welcome back here to Trader Minute. Great to have you aboard. Interesting morning in the market here this morning as we had the basically targeted assassination here last night of a Iranian general in Baghdad. And that strike was authorized by U.S. President Trump and has definitely sparked headlines, debate, all sorts of stuff about what could happen. You only have to turn on the TV for 5 minutes and it's all over. It's everywhere. So I'm not going to go and rehash everything that's going on, as it's just one of those situations and scenarios that we do see in the markets, and it could explode. And it could be nothing, but it's just one of those where I gave a few thoughts on it this morning, and other than that, I'm going to kind of continue, with the process and go with the process here. But also knowing that, the bears in this market do need a catalyst, and this is a potential catalyst, right? I have to be, mindful of that. I have to respect that, and be aware of that. But let's go take a look at the challenge positions. We have two positions on the board. We have Disney, which is down about $1.50 right here, and we have Starbucks, which is down about 60 cents right here. I filled in the prices just a little bit ago, but 272 and $1.60. So let's just update it here since it's moved a little bit. Nothing much. At 272. With the two positions total, we're down about $200. I feel fortunate for that. Feel very fortunate for that. Could be a lot worse, considering everything that's going on, everything that's happened. Either way, it's not breaking the challenge, and if it were worse, it's not something that would break the challenge. But it sure would be nice to get off to a strong start. And yesterday, had some good signs. We saw some rally into the close on both positions, but obviously the news has changed that. There's nothing negative for Starbucks or Disney. It is just one of those with the market. Now the stock exit levels 87.93 for Starbucks, and Starbucks is trading at 88.73. So nowhere close there. And then Disney, which is trading at 146.72, has a exit level of 145.20. So, would need about $1.50 lower to run into that. So, I'm going to continue to hold both positions and continue to play them out with the or manage them out with the challenge parameters and go from there. Now there are no new positions no new signals on the board here this morning. Let me show you the crossovers. You would expect a lot of bullish crossovers on a morning like this morning, but we do have one, and that is Boeing. And you know me, I'm very bullish on Boeing longer term and throughout the course of this year. Had a nice pullback into the end of the year as more muscle flexing of government officials, with the whole Boeing 737 issue. But does have an upside crossover on it. It wouldn't be a signal even if it held here today, as it is missing some other things. This is a good example, though, of being able to see an upside crossover on a day where the stock is down. It doesn't happen all that often, but we do see that happen, especially when we drop off a big down day and then it's for a lesser down day for the stock. But Boeing opened up and saw some buying initially, as we tend to see a lot of these aerospace, missile defense type companies. They will tend to jump when we have war talked about out there, and I do think that Boeing, not being green here today, is a pretty good sign that the market does not expect the situation in the Middle East to erupt into war, at least not yet. Right. And that's basically what the market's saying. You can look at other things like Raytheon, getting a little bit of a jump here, but, not a huge jump. It's also one where you look at Raytheon yesterday and you go, okay, did somebody know something? And the answer is yeah. The answer is absolutely yes. Somebody knew something, and you look at others like Lockheed Martin, really performing well here today, and that's what we would expect to see on the heels of that. Of that news. Okay, so one upside crossover. Sorry, I got in a little tangent there. On the downside, we'd expect a few more, right, with the type of day that it is here today. Let me show you what those look like. You can see American Airlines, CSX, Dollar General, Home Depot, IBM, Juniper, Coca-Cola, MGM, Twitter, Valero, and Vulcan Materials. And we could see some of these turn into signals by the end of the day. But as they sit, they aren't signals. You say, well, why is Valero down? It's, oil stocks are up with oil. Well, it's one of those things where oil prices are up, but gasoline prices really aren't. So it's not helping the crack spread. And with Valero being a refiner, they want a higher crack spread. This is one that I thought would trigger to the upside yesterday. In fact, I even priced out the options, but it didn't trigger, and good thing. But overall, we could see a few downside triggers come in from this list. But as they sit right now, none of them are signals here. To the downside. Okay, so I'm going to continue to hold Disney and Starbucks, and we'll see how those play on out. And hopefully they can hold on here. I don't expect any miracles from them today or anything like that. If they do go green today, great. But I just kind of expect that they'll hold up and then start to recover tomorrow. Is what I think the most ideal situation is, or the most ideal expectation is. Obviously, the most ideal situation is they both jump 50% here in the next 5 minutes, but probability of that very, very small. All right. Now, yesterday, I got cut off. I got cut off from video, and I was kind of talking about what I would talk about this morning. And, that is the addition of EEM, EWW, and EWZ, and those three ETFs to the challenge watch list. And, I got the blue screen of death on my computer, and I've never had that on this computer before. This computer is only used for broadcasting and, video streaming. So it's one of those where I was a little shocked, but, hopefully it doesn't happen again. They looked at it for me, and everything's good to go. But anyway, my apologies yesterday for that. But I do want to go show you why, decided to add these here. Going into this year, and it's a very very interesting mix, and I think this is something that applies from an investor standpoint more than an individual trader standpoint. But when there's something that's really solid from an investor standpoint, I expect a bigger trend. So from a trader standpoint, okay, I'm willing to add those. I will have to be careful with the option pricing and the signal and everything else. They may not be something I could trade every time they trigger. But let me show you why they were added. And let's start off here by coming in, and we'll pull up a 1-year chart. And let's just come back here to select start end. And now here we go. We'll just go year to date and go 2019 and take it out to today. It's not going to be a big deal to add the extra days. And let's clear out every indicator because I frankly don't care about the indicators with this. What I want to see is the performance, right? The performance of the stocks of these ETFs. Basically last year. Okay. And let's, that's Starbucks. Let's pull up EEM. Okay. Here's EEM, and the performance last year, okay, was about 20%. You say, all right, 20%. No biggie. No, just by itself, that number of 20% doesn't mean a whole lot, right? But, 20% here. Okay. EEM. Sorry about my mouse drawing here, but EEM 20%. Okay, great. What about EWZ? Right, this is Brazil. About 29%. Yeah, since the beginning of last year. Right, EWZ. It's performed pretty well, right? 29%. Okay. Well, what about EWW? Mexico, right? This is 15%, right? So EWW is 15. That's how well they did last year. Increase of 15%. And you say, okay, we can go through a lot of these global ETFs and we can look here at China, the FXI. You'll notice this is only 18%. It lagged. In fact, in August, it was negative. It really had a strong push into the end of the year to make up some ground. Okay. You say, all right, most of these, they're global. China, emerging market, here with them. All right. Great. Fine. Well, let's compare that to the U.S. Compare that to the SPY. Performance was 32%. The SPY, 32%. Okay. What about the IWM? Small caps, a little more indicative of what's going on in the U.S., 26%. Okay, 26%. So we had overall, okay, when we compare the U.S. markets to global markets, and this isn't every global market, but in general, right, we look at China, we look at Brazil, we look at Europe, we look at India. Here's India up 5%, right? Global markets underperformed the U.S. last year, and in some cases, in a massive way. Maybe the biggest glaring one is China at 18%, right? In some of these cases, it was a really big underperformance. One of the things that we will tend to see, historically, is that when we get some sharp, divergences in performance with global markets, we will see a catch up, right? A rotation in the following year that kind of rebalances the mix. You have fund managers looking at year-end data and going, okay, big lag in China, big lag in India, and they ask themselves this question: is there value to be had there? Right? Is there value in those stocks? With their underperformance? Yes, we know why they underperformed. Everything else, it's no big secret, right? But now, is there value, and can I go get into them, take advantage of them, and play them going forward, right? Here's a good example, Russia. Russia has been a huge laggard in the last few years. Last year was a big leader, right? And did you hear much about Russia? Did you hear all this? Yeah, well, Russia's doing this. No, it wasn't in the news very much. It wasn't talked about all that much, right? But it was a big outperformer. Well, Russia has been a big laggard for quite some time, right? This is something that, we saw a big haircut in Russia back in 2015, 2016. But you can see 2018, Russia was down, right? The Russian ETF in 2018 was down with global markets up, right? It was only slightly up in 2017. Right, so this is something that the last 2 years has been a strong laggard and turned into a massive leader last year. We see China being a strong laggard, Mexico being a laggard. Both of these lagging. Why? Well, because of trade with the United States and fear over trade with the United States, right? And so investors haven't been as eager, to put money in. So do we start to see investors, instead of going, well, I got to stay away from the danger, go, well, is there value? And maybe we should go take advantage of it. And I do think we will see that this year. And I don't think it's one of those plays for investors where you buy the FXI and you short the SPY. I don't think it's one of those combo plays where you just buy one of these and sell one of the leaders. I don't think you can put that on there yet. But I do think it's one of those where, to take a look at India, to take a look at China, to take a look at Mexico, is a very interesting scenario going into going into 2020. And so you say, well, okay, well, Jeff, you don't have the FXI on there. Yeah, and you're right, I don't. And why? Well, because I'm going to let the EEM be my FXI proxy, right? It's the emerging market ETF, tends to perform about the same, tends to do about the same. EEM has a little more liquidity, so I'm going to let EEM be that proxy. And then what I decided is I want one of this year's laggards that's tradable because, India, which is the one I'd like, it's just not tradable for the challenge. PIN and some of the other Indian ETFs just simply aren't tradable. EWW is tradable at times, sometimes no, sometimes yes. So I decided with EWW. And then I wanted one of the leaders. And, RSX, the options aren't fantastic. EWZ, they're better. So I decided to go with Brazil. So took one of the leaders, took one of the laggards, and then took kind of the China play there with EEM and added those into the, into the challenge watch list. Now, these are stocks that, do not have some of the same performance with the challenge algorithm as some of the individual stocks that are in the challenge watch list. So I do have to be aware of that and manage that accordingly. It's not going to be something where where if we have a trigger on Apple and a trigger on Disney and a trigger on EWW, I'm going to choose Apple and Disney over EWW, right? But in those scenarios where it is just some of the ETFs that are playing out more than anything, then I will look to grab them. All right. So that's the addition of EEM, EWZ, and EWW to the challenge watch list here. All right. All right. Last thing I want to take a look at here with you is the ISM report. And, the ISM report came out this morning, and let me show you on S&P Futures what happened here. You can see that this morning the market opened up, we saw a solid initial buy, and then it saw this little sell that it's now erased and sell on some pretty good volume there. Not bottoming volume, not topping volume at all. You can't say that about it. But we saw this pullback of, what was it, about 7 points, 8 points in the market, right? Which on a normal day would be looked at by market participants, go, wow, that's okay. What's going on, right? On a day like today, not so much, right? Not so much. But this is the ISM number coming out. And this is the last month where the market is going to look at the ISM data and go, yeah, but, right? Yeah, it's an ugly number, but, this is before the whole trade deal happened and all of that, which has been one of the excuses for the economic data eroding over the course of the second half of last year. It's that yeah, but scenario. Yeah, but, it's because of this one thing, and that thing's getting solved, and it'll come back, right? But here we are. It's ugly numbers. It's ugly data. Here we go. PMI number 47.2, contracting at a faster rate now for 5 months. Not only is it below 50, but it is weakening. It is contracting at a faster pace. New orders, same thing, contracting at a faster pace. Production contracting at a faster pace. This is a big drop in production. Employment dropping, contracting at a faster pace. Supplier deliveries, well, those are growing, right? Okay, those are growing. Great. Inventories, those are contracting a little bit, right? But not as bad as last month. Customer inventories, they're dropping here, 41.1. Prices on the rise, prices on the rise here, which, is going to be looked at by many as hey, this is a sign that, this is the bottom. But, historically, I don't think we can make that argument. Backlog of orders, exports, imports, nothing, really there. Both contracting. But you look down, contraction. Most sectors here are contracting. So we have the overall economy growing, and we have the manufacturing sector contracting, right? And most of its key elements contracting significantly here. This isn't a there's not a lot to sugarcoat this number. Okay, so the market sold off on it, rightfully so. It is that yeah but scenario, but this is the last month that the market's probably going to give it a little bit of a pass. When I saw this number, I thought, nah, there goes the market's, hope for maybe going green today. But this is something that's going to be in the back of investors' minds, and rightfully so. And something that, if you're bearish, you're pointing to this and you're saying, hey, you know what? We have a market that's kind of on a sugar high right now. And, when it starts to realize what the data really is, then we'll see it pull back, sharply. I don't think you can make that argument yet, but, I know that is, one of the bearish arguments that is out there, for it. Okay, so that was the ISM number here this morning. We're going to have the Fed minutes here this afternoon. That got shifted to this afternoon from Thursday. And we'll have a lot more data coming out next week. We did have the PMI number yesterday, which, is a number that contradicts what we saw in the ISM today, right? It's showing that, hey, expansion above 52.4. So, it's just one of those where, okay, it gives investors room for that yeah, but, argument, that yeah, but scenario here with it. All right. All righty. Well, thanks for hopping on. Any questions, please let us know. Support at TraderMinute.com. And I'll be back on with you here this afternoon. We'll talk to you then. Take care.